Hello, welcome to my very personal finance experiment. This is going to be for the month of October 2020. I'm going to talk about my purchases, sales, and some dividends that we made this month, as well as talk about goal setting. But first, I'd like to just address the state of my portfolio. So, as it stands, on fears of a coronavirus lockdown, the whole UK stock market seems to have tanked. I'm currently at a loss of £150.50, which you can see down here just by the live results. The biggest cause of that loss does seem to be BAE Systems. As you can see here, we own 125 shares, an average purchase price of £4.81, and they're currently trading at £3.99, which equates to a real loss of £102.84, or 17%. Now, you will have losses in the stock market, everybody does. The premise of stock trading is that your winners are always greater than your losers. There's quite a few good books on it that'll teach you exactly where to put your stop loss and things like that. As I'm holding for the long term, I don't really need to worry too much about it. I've got every faith that in 10 years' time, BAE Systems will be worth more then than it is worth now. So now for me, it's actually a really good time to buy BAE Systems. Unfortunately, I've already made my purchases this month, and it was literally the day after that the stock market started to drop, which I'm a little bit gutted about, but hey, what are you going to do? So for me, this is a really, really good buying opportunity, especially for BAE. I did have to have a long think about not taking out £400 from my house fund and just chucking that at BAE Systems. I think that there's a lot to be said for putting money into a loser, where if it's going to lose and continue losing, all you're going to do is pump more and more money in until you've lost it all. I mean, I don't think that's going to happen, but I'm still going to hold off. I'm not going to put a chunk of money into it because that's not what my strategy is. My strategy is 10% every month, and you need to stick to your strategy. If you start breaking the rules, that's almost guaranteed to make you fail. So we'll stick with putting in what we've been putting in. I've already made my purchases, which I'll go over in just a tick. Okay, so the purchases, sales and dividends that we've got for the month of October, we were actually paid a dividend of £6.89. That was from iShares UK Dividends, which is an ETF that holds the top 50 dividend paying companies of the FTSE 100. So they've paid us. So far, they've actually paid quarterly, and they've been very consistent with that. As you can see, our total dividends are £47.59, which is good. That has been over the course of about 7 months. So I think that's doing quite well. We seem to be growing quite reasonably. As you can see, I sold 100 Investec shares. Now, I was quite happy with Investec, but they don't seem to be doing much. They seem to be sort of hitting £1.70 and then dropping off. And that's not what I wanted from them. They were previously, before March, around £4, and I was hoping that they'd be making some progress towards that, but they don't seem to be. They're stuck in this really bizarre loop between about £1.70 and about £1.30. So I've sold them at £1.59 per share, and they're currently actually trading at £1.42. So we've not done too bad there. I think all in all we made about £1.12 profit, so nothing really to sing about. But I took that money from Investec and I invested it in some more iShares UK Dividends. As I said, they hold the top 50, so it's really good exposure to the UK, although I'm regretting my exposure to the UK at this exact time. I also bought some more BAE Systems because they were down. They're obviously down a lot more now, but when I was buying them on the 22nd of October, I can't remember exactly whatever 79 divided by 18 is. Anyway, as you can see there, we put £200 in, and I bought BP, and then the remainder I chucked on BAE Systems again because they were down. So there is some justification for BP, so I'll go over that. Try as I might, though, I can't find the information at all on the Trading 212 website, but I can get it from the app. So here's where we're at with BP. Bought at an average of £2.03 per share. They're now at £1.96, so immediately made a loss. But that's only in the course of a couple of days. I still think they've got a lot of legs to run. So the price to earnings ratio is currently 3.54. Now, based on the size of the company, I think that their PE ratio should be around 12 to 15. So this means that per share, they should be worth about £5.50 to £6, which I think is a more reasonable price for BP, considering its size, considering the amount of assets it's got, the amount of heavy machinery and things like that it owns. I don't think it's unrealistic to expect to see it around the 12 PE ratio mark, which would be really, really good. It'd essentially triple our money if it gets there eventually. A lot going for BP as well. So they're moving towards green and sustainable energy, which is obviously a big subject at the moment, especially with the push from the UK government for carbon neutral by, I don't know, is it 2030 now? It might be. They also have closed down a plant in Western Australia, which is, I think, initially it's bad news for the 600 job losses, but I don't know if the financial markets will view it as good news, showing that BP are willing to cut a thing that's not profitable in order to make more profit. That's the sort of thing that can go either way in the media. They've also started a carbon capture project, which will enable them to siphon off carbon dioxide. And they're working in partnership with a company called ENI, which is Italy's national supplier of oil, Equinor, which is Norway's national supplier of oil, the National Grid, and Total, which is based in France, and Royal Dutch Shell. So they estimate that they're going to be capturing, just in the UK alone, 27 million tonnes of carbon dioxide per year. What they're going to do with that is actually pump it underneath the North Sea. So I don't know what that is going to have as long-term effects. It might be that they end up pumping it under and causing earthquakes, and then there'll be a real issue. But I suppose geologists and people with actual professional opinions have looked at this and said, yeah, it's viable. So for me, over the long term, it seems to bode well for BP. I know they're going to go through a rough patch over the next sort of 6 to 12 months. Once they've found their feet, after sort of 2 years, I think they'll really start to come into their own. They'll start buying up green energy, sort of smaller green energy companies, and then they'll add that to their portfolio. And I think that they're going to remain at the head of the pack for a lot of energy providers. Hopefully they do well. They might not. Like I say, I'm not a professional. This is my very uneducated opinion of how things are going to go over the next 2 years. I imagine that there's a lot of people with a lot more qualifications who'll tell me exactly why I'm wrong. But at this point in time, I think with the amount of information I've got for BP, they're a good buy. So we purchased them. And finally, getting on to goal setting. So for me, I set an ultimate goal of £2,000 per month per year, and then divided it up into what I considered achievable slots. I divided that over a total of 28 years. So as you can see, for year one, I was expecting to have £1,965 invested with £35 returned. And for year two, which has actually started in September this year, I was expecting to have £3,555 invested with £80 returned. As you can see, we've got a total of £3,623 invested. That is £2,623 in Trading 212 and £1,000 in Rate Setter, which I'm actually still waiting to access, even though it's been a good sort of 4 months. And our total profits from share sales of that's me just selling things that I've changed my mind on, are £14.57. Our total dividends are £43.59. and our total interest from RateSetter is £20.58. This brings our total annual profit to £60.98, which I think is quite a good return based on essentially a year's saving. It's a bit more than what I was expecting, which is both good and bad. It means that my goal setting, while realistic, was actually too conservative. So I think I need to alter the amount I'm expecting to see. And by altering that amount and continuing down the path that I'm continuing, hopefully I can just shave a couple of years off when I think I should achieve my ultimate goal. So that'll be nice. Other than that, if you're going to goal set, if you're going to go about doing this yourself, I think don't just say, I want to be rich, or something menial, or just something that you can't really put a figure on. Say to yourself, I want to have £1,000 in 6 months, and then work to achieve that, and then £2,000 in 6 months, and then work to achieve that, and so on and so forth. And eventually, before you know it, you'll have achieved the goal that you want to achieve, rather than just saying, I want to be a multimillionaire, and then I don't know. For me, that sort of mentality just doesn't work, to set an ultimate goal and then just go about working towards it without being able to gauge your progress. I think a lot of little steps is going to help me achieve my goal rather than just one big one. But that's just me. I'd love to know if anyone actually listening has set their own goals, decided to start doing something similar. And other than that, I'll create another video in a month's time. See you later.